everyone, my name is Parul and welcome back to my channel Ask Parul. Today I have an exciting announcement that would probably leave you on the edge of your seat. So the Securities and Exchange Commission, commonly known as SEC, last month has given the green light to 11 Bitcoin Spot ETFs. This is a major development in the world of cryptocurrencies. So we'll do a deep dive in this video to see what kind of a global impact this will have on the crypto market and also for the investors. Will this open a floodgate of opportunities for the investors, or it will probably bring in more challenges and possible risks of volatility? So first things first, what exactly are Bitcoin Spot ETFs? Well, an ETF for exchange traded fund is a common type of investment that holds multiple assets such as stock, bonds, or commodities. Now imagine this same concept being applied to Bitcoin, which is the world leading cryptocurrencies. So Bitcoin Spot ETF will allow investors to gain exposure to Bitcoin without directly owning the digital asset itself. So this will be achieved by tracking the price of Bitcoin in the spot market, just like an ETF price is being tracked in the market. To discuss all of this, I will have my guest Josh Gilbert, who is a market analyst at eToro and will provide us with all the latest market news and insider tips and insights. Josh has done 2 podcasts with me late last year around the financial tips for wealth creation and also for 2024 forecast for global financial markets. Do watch those podcasts. I'll be linking that in my description link below. And if you're new to my channel, then do subscribe to my channel. If you're keen on getting more knowledge around the finance and investment, then do check out the playlist which is given in my description link below. And if you don't know what an ETF is, then this is a video where you will be getting details around stock versus ETFs. I'm also going to be linking the detailed guide on everything that you want to know about investments such as mutual funds, bonds, etc. The link to that is in my description link below. But coming back to Bitcoin Spot ETFs, so we all know that how in the past ETFs have revolutionized the way we invest, and Bitcoin is stepping into the same spotlight. So we'll jump straight into the chat with Josh to find out more about it. Stay tuned. Hi Josh. Welcome to my channel. It's really great to have you in 2024. And I remember we did a podcast last year wherein you mentioned that the Bitcoin Spot ETFs, once it's going to get approved by SEC, it's going to be a big revolution. So I think I really wanted to have this conversation with you. So maybe let's just get started by asking that. This is for general audience, that how is the Bitcoin Spot ETF different from the traditional way of investing in Bitcoins, and why this SEC approval is so important for global investors?
Yeah, so I think the first thing to obviously mention is that we obviously did get that acceptance through, which is obviously what we discussed in 2023. So that's fantastic news. We have this ETF now, and simply the best way to look at it is that it's an on-ramp for decentralized finance to traditional finance. Think of it as a bridge. It's probably one of the biggest mainstream moments that we've seen for sort of Bitcoin, because we're taking crypto assets and sort of taking it onto Wall Street. So essentially what we're sort of seeing is that we're seeing a crypto asset being sort of bundled into an ETF that is then traded on a stock exchange, just like Amazon, for example, would, or other stocks as well. So as I say, for Bitcoin, this is important because it does sort of bridge that gap between decentralized finance and traditional finance as well. So rather than, say, for example, having to maybe go and purchase a Bitcoin and taking it onto a ledger or buying it through someone like eToro, you can do it through an ETF. And importantly, it's regulated by the SEC. So it's the first regulated product that we've ultimately seen come through. Really, there's no sort of benefit necessarily for a retail investor to own the ETF over actually buying sort of the traditional asset on say eToro, for example. But this is a mainstream moment for, say, institutions. It makes it slightly easier for the institutional world, think pensions, asset managers, and so on, that are investing billions and trillions of dollars into this asset. They're going to be going through, some of the world's largest asset managers, such as BlackRock, for example, to sort of buy this asset in a regulated way, which we haven't been able to do before.
Yeah, Right. And what does it mean for normal investors? I know you split that between the retail investors and institutional investors. So what does it mean for normal investors of both the kinds, both the positives, and I'm assuming there could still be potential risk because historically Bitcoins have always been, they've always been a bit of a volatility and less transparency. It's been a bit less accessible as well. So what does it mean for investors, both positive and the downsides as well?
Yeah, I think firstly, ETFs are a net good for crypto. I think, it's a good thing. As I said, it's going to bring institutional capital into Bitcoin, and it will grow
Right.
trust within the industry. We're bringing new assets, new users into the crypto ecosystem, which is ultimately institutional money. Normally, it's the other way around. Institutional investors usually start, and then we see retail come on board. But with crypto, it's sort of been in sort of reverse, and the large institutions have mostly had to wait for these sort of rails ultimately, which are the traditional financial rails, to sort of come into place. To buy crypto, and that's where the ETF sort of comes in. It's that traditional rail that institutions are comfortable with, that they can then sort of buy. Of course, the overarching risk is, as you mentioned, that crypto and Bitcoin does obviously have a long history of volatility. The price action over years gone by, has been nothing short of remarkable to the upside and to the downside. So there's still plenty of volatility with this asset. There is, plenty of discussion around that the ETFs may take some of the volatility away, because we're going to see, lots of volume coming through, maybe more trading, which may take away some of that volatility. And when you have a regulated asset in place, again, we may not see some of the more significant moves that we've seen in time gone by. But like I say, if we're looking at history, this is an asset that has plenty of volatility. So investors should know that it is a high risk asset class.
Yes.
That's something to really note before getting involved with the asset.
Yeah. Yeah. And how do you think it's going to? I know it's still early days, but starting 2024, we've got this news. How do you see the rest of the year? And of course, maybe next few years, will this really revolutionize the global investment market? And I know that we still have few other things, and correct me if I'm wrong, if it will have a direct impact on this one. We do have some interest rate cuts potentially coming up later this year. We also have another event, which is Bitcoin halving, probably happening in April. So do you think that everything is like all this is kind of coming together? Are we heading towards something? What do you think about it?
Yeah, look, I think we're sort of creating the perfect concoction for sort of Bitcoin and crypto assets at the moment.
Yeah.
And I think you mentioned a couple of things there, and there is so much, I think, for investors to be positive about when it comes to sort of Bitcoin and crypto markets. Those catalysts that we're sort of talking about there, I think, give this rally sort of further legs into 2024. We've just recently tipped over the $50,000 mark, depending on when you're sort of watching this. But as you say, we've got sort of 4 or 5 rate cuts lined up from the Federal Reserve in 2024. That acts as a massive tailwind for Bitcoin and crypto assets, because ultimately that will sort of give investors, the feeling of being able to take on a little bit more risk. The sentiment around risk is better when we obviously have rate cuts coming through. And then, as you mentioned, the Bitcoin halving as well, that's only going to enhance the asset's scarcity. So it basically comes back to the sort of the simple dynamics of supply and demand. And at the moment, we're seeing huge demand, but we're ultimately going to see supply drop. So, that's a real big factor. And ultimately, the halving has sort of always acted as sort of the key catalyst for the next bull market. If we look back at history and we look at the cycles of Bitcoin, anytime we've had a halving, the 3 halvings in the past, the 2 years following the halving have always been positive in its history. So that's really important to note. And then, obviously as well, we have the ETFs. We're sort of seeing billions of dollars flow into this asset, just months after launching, weeks after launching. So the potential to continue to see billions and potentially even trillions of dollars flow into this asset in the years ahead is really there, especially as institutions become more comfortable with the asset, and ultimately more people want to own the asset as well. So I think we're going to continue to see those flows coming through in ETFs. and of course those other sort of catalysts we've mentioned are sort of making a bit of a perfect mix for sort of Bitcoin and crypto assets at the moment as well. And the beauty is as well that it may not be the end of crypto ETFs as well. I mean, outside of Bitcoin, Ethereum, is an asset that is the second largest crypto asset, but is also in line for a spot ETF as well. So the SEC have an approval deadline on that by May of 2024. So if we do see another ETF come to market, it's another tip of the hat from regulators to crypto assets, which will only give further trust to the space and sort of give more reasons for investors to sort of own crypto assets.
Yeah, and I think if you look at ETF, inherent nature is to minimize risk, right? Because it kind of puts your investments across multiple investments like stocks, etc. So if we apply the same concept to spot ETF, do you think that for Bitcoins, it would kind of maybe, if not minimize, but at least reduce some inherent risk that naturally comes with Bitcoin, or no?
Unfortunately not. So often when we look at an ETF in sort of most cases, usually it can be a basket of securities. It can be stocks, commodities, bonds. We can have international shares, local shares. So usually it's a bit of a mix. With the ETFs, they are simply just holding Bitcoin. So we're tending to probably see the same performance that we're going to get from Bitcoin. So it's the spot ETFs. We're tracking the price of the actual ETFs themselves. So I guess in terms of maybe the risk side, again, it's an SEC regulated product. So it has to go through obviously a lot of hoops compared to obviously decentralized crypto assets as well. So we could maybe look at the risk element there of, if you're an investor and you want to own a product that is, regulated by the SEC, then there is, some improvement on risk there. But in terms of the volatility and the price action of the asset, that doesn't change.
Right. So it's just a bit of a regulation and a bit of a trust and transparency that it adds, but the inherent risk would still be there. And of course, when compared to other instruments, it's still a bit of a highly volatile and more risky instrument, correct?
Absolutely. Yeah, absolutely. So like I say earlier, it's that on-ramp from, this decentralized asset that we've had in the past to traditional finance. So it's bridging that gap. And ultimately that is why we've seen institutions sat on the sidelines for many, many years. Retail investors own crypto assets very well. It's a very well-owned asset by retail, but by institutions, it's not so much because of the hoops that, those institutions would have had to go through in the past as well. So obviously for retail investors, eToro makes it very easy to sort of come on, buy crypto assets and keep those assets there. Whereas when we're obviously talking about institutions buying billions of dollars of this asset, it's a little bit more complicated. And that's why these ETFs, sort of simplify that and give that bridge.
Right. So currently we just have 11 ETFs, and I believe eToro has some 3 ETFs, right? Are you seeing that more and more stock exchanges opening it up, more spot ETFs coming up? Will this be made available globally, or how does it look like in the future?
Yeah, so like you say, for those that don't want to own Bitcoin directly, you can buy those ETFs on eToro. There are 3 on eToro right now. Look, I think from our standpoint, we believe that retail should own Bitcoin directly. You should own the asset. It makes for us not a lot of sense to sort of necessarily own the ETF if you can own Bitcoin directly sort of through eToro. But for those that want to, you can obviously do it through the ETFs as well. Completely depends on preference. And as you say, we've got 11 approved so far. And really the big race and the competition is to sort of try and be the lowest cost issuer as well. So ultimately that's sort of a draw for some people in terms of using these ETFs is costs and owning that. So yeah, I think over time we will maybe see more ETFs coming to market. We may see more issuers wanting to actually bring a Bitcoin ETF to sort of market. But I think those that have already been approved were the ones that have sort of really longed for a Bitcoin ETF for a long time. So really, I'm not sure we'll see loads more, but I definitely think we'll see more come to sort of market over time. But really, the biggest is already there, which is the BlackRock iShares ETF.
Right. And this will impact the global market, right? Not just the US. I think Australia, of course, we have had few ETFs here as well. So it's going to impact the global markets. And do you also see potential downstream impact on other crypto investments? Like we have Ethereum, which is the second largest, I believe, after Bitcoin. Like, do you see any downstream impact happening there?
Yeah, that's actually a really good question. I think if we do tend to see maybe the focus go towards Bitcoin, we may see the price action of something like Ethereum and other coins or other assets maybe not perform as well. And I think we really saw that in 2023. Yeah. Bitcoin was sort of the real driver of the crypto market, and it outperformed Ethereum and a lot of other smaller altcoins. And that's not what we tended to see from crypto markets over previous years. Previously, we would have seen the smaller assets, maybe Ethereum and some of those other crypto assets that are, we call altcoins. Anything smaller than Bitcoin is an altcoin. And they have tended to outperform because they are smaller assets and they tend to have higher volatility. But last year, we didn't see that. So we have already begun to see that there has been a focus on Bitcoin because of its performance, because of its size, and because people really want to own it. I think this year, though, we may see a bit of a comeback in some of the smaller assets and Ethereum. I think Ethereum is a name that, again, with this potential ETF application being accepted, in the middle of the year, that again has a lot of potential around it as well. And again, we've had such a big run from Bitcoin as well. It's just how further can this really go in terms of percentage gains? If we have another 100% gain this year, we're going to hit 100,000 by year end. So look, that's absolutely possible, of course, from what we've seen in history from Bitcoin. But it may be the year we start to see some of those other coins actually catch up and maybe outperform.
Yeah, perfect. Any last thoughts, Josh, from your side before we just conclude this discussion? Anything that you would want people to keep an eye on in 2024 in the next few months?
Yeah, look, I mean, I just think, more broadly, I think the ETFs are great news for sort of crypto markets. It's something that the markets have longed for from a long time. I think it's a really, great way and a great example to show that we haven't got to have a battle. It needn't be sort of traditional finance versus decentralized finance, rather, working together. We can sort of bring financial empowerment to sort of more people. We believe that sort of crypto assets are an unstoppable technology that can really revolutionize the world. So it doesn't need to be a battle. We can all work together, and we're starting to sort of see that, and I think that's fantastic. But again, there's plenty of catalysts for sort of Bitcoin and crypto this year. But it's always important to remember that there is, always risks when investing in crypto assets. There's going to be plenty of volatility. So make sure you do your research, look into these crypto assets, and only invest what you're sort of willing to lose into these assets.
Absolutely. I think that goes for every investment. It's very important to understand your own risk profile, your own unique circumstances, and of course, consult with a financial planner if required before you take up any step. This video, I keep saying that, but I think it's very, very important to again mention that these videos and discussions is only for education purposes, to basically make people aware about things so that they can be financially more literate, and of course they can do their own due diligence as and when required. So thank you so much, Josh. I think it was a good conversation. We'll keep an eye on this upcoming trends. And thank you so much again for taking our time. It's been a pleasure to interact with you on this topic.
Thank you very much for having me, Parul. Take care.